ישבתי לשיחה עם בריאן שנון שהוציא ספר שנקרא Anchored VWAP, VWAP מעוגן, מקסימום טריידינג גיינס, איך עושים תשואות מקסימליות בזכות מחיר, זמן ונפח מסחר. עוד שכבה בידע שלנו בנושא ניתוח טכני. אז למי שלא מכיר והגיע לפה במקרה, אני מיכה מאמריקה, אני מביא לכם את כל מה שקורה מהצד השני של העולם, בשפה שרק אנחנו מבינים, וכרגיל כל מה שאתם תראו ורואים בסרטון, הוא על דעתי בלבד, איננו המלצה לפעולה, איננו ייעוץ פיננסי, כיוון שהסרטון באנגלית, בואו אני אראה לכם איך אתם מוסיפים כתוביות. אתם נכנסים או במחשב או בטלפון, זה ממש לא משנה, יש דבר שנקרא Closed Captions, CC. אתם לוחצים על זה, פעמים רבות הכתוביות, אצלי הם כבר בעברית, יהיו באנגלית. כדי לשנות את זה אתם הולכים לגלגל את ה-settings, ההגדרות, צועדים ל-subtitles, ובסאבטייטלס אתם יכולים לבחור או English Auto-Generated, אם אתם רוצים שזה יהיה באנגלית, או להיכנס לפה לאופציות, רגע נחזור לפה, סליחה, אני אעשה לכם זומין על האזור, רק שנייה, ל-Options, ולבחור מה אתם רוצים, ויש שם גם עברית. וככה בעצם את כל השיחה, במקרה הזה זה דן דולב, אבל לא משנה, אתם תוכלו לראות עם תרגום שגוגל, יוטיוב, עושים אוטומטית. אז האם זה התרגום המושלם? ברור שלא, אבל זה הרבה יותר טוב מכלום. אתם מוכנים לשיחה? בבקשה. Hi everyone and welcome back to another show on our channel where we have a special guest today, Brian Shannon, who is the founder of alphatrends.net, which is a trading analysis, and I'm reading from paper, so I won't make any mistake, a trading analysis and market-focused education platform, and he also just released his latest book on technical analysis. Probably the lights are making a bit of a glare here, which is Maximum Trading Gains with Anchored VWAP, the perfect combination of price, time, and value. Brian, welcome.
Thank you for having me, Micah.
Thank you for being here. So I can start by talking and praising your work, but before we start talking about that, if you can kind of share with my audience your background and how you got to those 4 letters VWAP, which some might have heard and some might be using, and others would say, oh, now a new acronym.
Yeah. So I started in the markets at an early age. My dad was investing, he was an investor in the markets, and he used to watch Wall Street Week. So I would just kind of hang out with him on a Friday night back in the early mid 80s. And then, after graduating college in 91, I went to be a retail stockbroker at Lehman Brothers in Boston. Didn't really like being a salesman and bugging people on the phone, asking them for money. So my attraction was to the markets and trading. So I moved to Denver in 93, began trading full time on leveraged money, borrowed money, you name it, all the mistakes in the book. But fortunately, my brokerage background allowed me to, respect risk mainly. And I was profitable. I started a day trading office in Denver. I went to work for another company, built a proprietary trading desk for them, and, little things along the way, built courses and that sort of thing. And the first book, Technical Analysis Using Multiple Time Frames, was in 2008. I've been trading full time, since really 91. And here I am today with the newest acronym for a lot of people, the volume weighted average price. It's actually, it sounds intimidating, like a lot of these things that do, MACD, stochastic, Adams pitchfork, you name it, whatever. And a lot of people are reluctant, as I would be too, to add a new tool to their analysis. I stumbled across it in 2003, the volume weighted average price on a daily chart, on an intraday chart using Realtic software. And I was really curious about the way prices seem to be magnetized to it. So fast forward to 2015, I had TC2000 build the anchored volume weighted average price. And it just tells us the average price a stock transacted at, adjusted for every single share traded. So it tells us the true mathematical mean of the stock since a certain point. And that tells us who's in control, the buyers or sellers from that point. So that was maybe not so quick, but there's a little bit of an intro. We can go from there.
So that's excellent. And before we dive into volume weighted average price and other things, price, volume, just a reminder to everyone that anything you hear and everything you hear is only for educational purposes. And of course, for fun, this is not financial advice. So if we talk about specific stocks, this is not financial advice. Okay, we got that disclaimer out of the window. So there are about 3,000 different indicators last I checked on TradingView. Everyone swears to a different, indicator, a different way of measuring things. You can measure moving averages. You can, like you mentioned, you can measure. You can look at forks, Fibonacci's, support, resistance. Why volume weighted average price? Why specific that? And you know what? Before that, why charts? I'll buy a good company. I'll believe it's going to go up. I'm going to stay 5 years. If it doesn't, then I made a mistake. And if it does, then I'm a genius.
That's kind of like, I'm trying to think of the best analogy for doing something blind, flying an airplane blind. I could have these instruments and dials that tell me how high off the ground I am, or I could just kind of trust it by feel, or stick my finger out the window and I can tell. It allows us to look at the footprints of what other people are doing. Like it or not, there's a cyclical rhythm to the way money flows through the market. And if we can look at charts and just get that basic look of, are the buyers in control or the sellers in control, we can stand aside during bear markets and let things go down and wait and buy at much better prices as prices start moving higher again. It's kind of an interesting question because I've used charts pretty much every single day of my life, and to imagine not having them is like not seeing, truthfully.
I'm with you on that, but that's kind of a question that, not even a question, a comment that, big money, big institutions don't even look at charts. They just buy. And I think behind the scene, you're probably going to say that volume weighted average price actually. So the origin, you know what? I'm not going to put words in your mouth because I read the book, so I know what you're probably going to say. But volume weighted average price, who uses that? Why is it being used? Before we go to the specifics of how to use it?
Well, sure. I mean, everyone's trying to time the market in one way or another. Even Warren Buffett is trying to time it. He's buying now because he thinks the future value is going to be greater. Timing is what the market's all about. How we get there, because things are undervalued according to Graham's, forgot his name, the Graham analysis book, and that sort of thing is one way. And there's different ways to the finish line. It's not about criticizing other people and what they're doing, but instead saying, is there value to that? So when we look at a chart, again, it allows us to tell us what other people are doing and to say, are the buyers or sellers in control? And where do I get involved in a low risk way so I can participate in that trend and maybe even marry the fundamentals along with the technicals? A lot of people do that. And there's, institutions that use it. I mean, God, ever hear of George Soros or Stanley Druckenmiller or Stephen Cohen? I mean, they all use charts. They have departments of analysts who are looking at charts for them. Go to any recent interview of Stanley Druckenmiller. He talks about using charts. So if people think that it's just like a bunch of little geeks, in their mom's spare bedroom looking at these things, they're wrong. So back to the story I told in the book about Ken Griffin. For those that don't know, Ken Griffin is the head of Citadel, and Citadel is a market making firm and a hedge fund. Last year, Ken Griffin made more money than any hedge fund manager ever in the history of the world. And his personal income, grew more than anyone ever. So how did he do that? Well, his firm makes markets and stocks, and they trade. And he, when GameStop and AMC hearings occurred, what happened there was those people, the congressman who interviewed him, they asked him like, what are you doing in the market? And he said, well, basically, the majority of the orders that we execute are algorithm based. Most of those are based around the volume weighted average price. This is his testimony to Congress. I'm not making this stuff up. This is the richest guy in the world who made more money than anyone. So when he says it, I mean, you can listen to Warren Buffett too, but this guy's making more money than Warren, at least last year and the year before. So, things change, markets change, but the volume weighted average price developed as a benchmark for an institution that's buying a stock. If they want to buy 500,000 shares of Microsoft, they want to know that they got it at a fair price. You can't just look at Microsoft and say, well, Microsoft is at $331. And the high was 335, the low was 328. We gave it to you at 331. So the institution's like, well, how do I know if that's a fair price? If they look at every single trade during the course of the day, the volume weighted average price, they might realize that the volume weighted average price was 332.50, and they bought it at 331. They're like, hey, you guys did a great job. Or if it's flip the roles, the VWAP was at 331. Then they got their execution at 332.50. They're going to say, wait a minute, you guys aren't, we're not doing business with you anymore. So the way that it works is that the market, the volume weighted average price is called the price that a naive trader could expect to get. So it's just the average. That's it. And, for an institution, that's fine. They're not trying to beat the market today. They're trying to build a position and do that in a way where their order doesn't move the market, doesn't have that market impact cost or the information leakage. So they have to cut it into small pieces and buy 50,000 shares in the first 5 minutes of the day, because that's where 10% of the volume is done, and split that order throughout the day so they get the fair price at the end of the day.
And I think that because our viewers, some might be just beginners in the stock market, and some might be intermediate, and some might be, professionals. Probably we need to spend a few minutes on kind of explaining big orders. Mm-hmm. Because, for a regular retail investor, let's say $10,000 per whatever trade would be considered quite big. $10,000 for regular retail. I'm not talking about the big ones, sure. Right?
Yeah.
If you're buying for a trade, 10,000, maybe even 20,000. That's a lot, because if it's 2 or 3 or 5% of your portfolio, that's a lot. That means your portfolio is heavy. Mm-hmm. And for institutions or institutional investors, this is 10,000. They don't even wake up in the morning. It's like it's from the pool in the Hamptons. Just buy it. Don't even call me, right? So let's talk a bit about that, because I think that would kind of help our viewers better understand why it's so critical to identify that sweet spot of what is the right price to buy.
Right. So an institution, again, is trying to build a large position. They might, for instance, look at a company like NVIDIA and say, those were great earnings. We really are underweight this stock. The report, their forward expectations were off the charts. We need to buy a 2% position in this account that we have. Well, that account is $1 billion. So they're going to have to go buy, 2% position of that. And that's going to take time to build that position. So you're looking at, a $4 million or $40 million order. Mm-hmm. So they don't want it. They might say, we're going to buy that over the course of the next week or the next month or between the next earnings report. So they'll split that order and say, we're going to buy $1 million worth each day. Let's just use a round number like that.
Yeah, that's fine.
So they'll say, well, how do we do that? They look at the volatility, the average volume curve of the day. So we have that surge at the beginning of the day, kind of drifts low in the middle of the day, and it has that U-shaped. So they'll say, we've got to buy $1 million worth of this stock. The stock is trading at $420. So we've got to buy, 50,000 shares today. So if they're buying 50,000 shares, they don't want to buy 50,000 shares just all at once. They want to go in and participate with the volume without moving the market at all. And they'll say, 10% of the volume is done according to our algorithm in the first 15 minutes of the day. So now we're going to buy 5,000 shares during that first 10 minutes because that's 10% of my order.
Yeah.
And throughout the day, they will try to, get the average price for that 5-minute, 10-minute increment that they're buying for, so that by the end of the day, they haven't disturbed the market with their order, and they haven't shown their hand to the market either, because they're buying in small pieces along the way. And they do that every day for 30 days, for 90 days, whatever period their anchored VWAP program goes for. So they design it to say it could be for a week to date order, a month to date. And some of these orders get really massive. So you can see that, if the stock gets, runs away from the anchored VWAP during the day, and it's displayed as, similar to a moving average, that it'll pull back to there and find buyers at that price. Mm-hmm. And the reason is that there's programs waiting for it to come back to the average price. They're saying it was a standard deviation above, so we're not going to buy there. As it pulls back, the program turns back on and automatically knows to buy at that, so-called fair value for the day. And you often find support or resistance at the volume weighted average price. It's the true measurement of who has control. It's not always, is the stock up or down? Let's say the stock gaps up and then starts selling off. Well, if it's below the daily volume weighted average price, it means for that day, the sellers are in control. Yeah. It might be up 3%, but there's profit takers. So, it depends on what your personal time frame is as far as which one is most important.
So basically, what you're saying is that big institutions are using a tool that we, the retail investors, if we would start looking at it, using it, would have the same advantage as their heavy computers, algorithms, all that. If I'm trying to kind of crystallize the whole message.
The whole message, yeah. That's exactly what it is. And you had offered, I can share a screen. So let me
stop sharing. No, it's on my side. Now you can probably share a screen. I'm adding it. Everyone can see it now.
So here's a stock I had put on Twitter the other day. Not this one. Let me get it. Are we showing it now?
Yeah, everything is presented. If you want me to stop, tell me.
So here's a chart, again, of a stock called InMode. And this is each
so even an Israeli company, INMD.
Well, there you go. Perfect. Your audience probably knows it. And InMode was a great stock to own during this period, right? When it was going higher. You wanted to own that. But for people who just learned about this company and said, hey, I'm going to buy it. It's at a value. It used to be 95. Now it's 70. Well, look what happened there. You don't want to own them when they're in that stage 4 decline. So it's just a real brief stage 1 accumulation, just kind of sideways. We don't know what's going on yet. Buyers take control. So it's innocent till proven guilty. Buy in here, raise your stop after pullbacks, add, raise your stop, etc. Starts getting really volatile, time to lock in some profits, stand aside or sell short. And if they didn't scare you out on the way down, they'll typically wear you out as the stock goes sideways. So in this weekly time frame, we can see it's been pretty much a year of do nothing for this stock. And during that time, we can see that the longer term moving averages flatten out and starting to rise. But what we really want to know is who has control. So from that highest point up there, what I'm going to do is, you see this little cursor? I'm going to drop that, and that purple line, which I'll just make a little bit thicker for emphasis, that's the volume weighted average price from the high. What that tells us is the average price the stock transacted business at is right there. Okay. So right now with this stock above that, it means the average person who is dollar cost averaging down, the average buyer is making money now. The average buyer is feeling good. So there's not likely to be a large source of supply to say, hey, I'm tired of owning this stock. Instead, on average, they're feeling good. The average short seller is starting to feel like, oh, wait a minute, this stock is above the price I shorted at. It might go higher. And if so, look what happened last time when we had this big run over here. It's not a blueprint of what's going to happen, but it certainly provides us, traditional technical analysis, resistance broken becomes support. But this point right here, we know with 100% certainty, the math says the buyers are in control. It doesn't mean they'll maintain control, but they have gained control. So then we look at that on a daily time frame, and this is we just got above that yesterday. And 6 months ago it tried, but it failed. So that's why we would use a stop loss order in here. Now it's going again. Where would your stop order go for an investor? Maybe down here. And if you believe that the stock is now an investment because it's a good company and Warren Buffett is buying it, then it's likely to do something, along the lines of this. Maybe if the fundamentals support it, that we could see another stage 2 uptrend develop. But if it starts to instead do this and break down, well, then we've got to get out of the stock. We want this to happen, but we have no control of what will happen. We just know that on average, the buyers are feeling good. On average, the shorts are feeling bad. This is now the best time to own this stock in the last couple of years.
Excellent. That was an amazing explanation. Now I'll try to do something here with the screens. I'm removing your screen for a second. I'm adding my screen. The reason for that is I'm going to go over and see if I practiced it just like you did. So let me hide my moving average. It's good for my viewers also to see that at least we're all learning something. This is, of course, TradingView. You're using a different platform. Doesn't really matter. And there is a volume-weighted average price on TradingView on the left-hand side for all the viewers. You can see here there's anchored VWAP. I'm going to use that, and I'm going to go. So I already did that while you explained. So let me just delete it. I'm going to go to average weighted to the top. We're going to talk about anchoring in a second. I anchored it to the highest point that actually, in this case, it's their all-time high. And we see the same thing here. So anyone here that uses TradingView, it does the same thing as Brian's software. Don't worry. So you started anchoring it, and you went directly to the all-time high, right? So I understood the explanation, by the way. This gives a great understanding of a breakout, just like a line that we usually cover, which is the resistance that's broken and then becoming support. So it's a different way, maybe an additional way of looking at the price in the price in this case. Why did you anchor it to the all-time high and not someplace else?
Yeah, great question. I mean, there's a lot of places we can anchor to, but in this case where the stock, had such a terrible bearish experience and then turned sideways for a long period of time, it's that phrase, if they don't scare you out, they'll wear you out.
Exactly.
Well, when do we get back involved? And of course, traditional technical analysis tells us resistance broken will tend to act as support. But and that's good at identifying one level. This, you can look at it not necessarily as a replacement to what you do, but something additional to say mathematically who is in control. It looks like the buyers are in control, but we don't know where all the volume really occurred. Where there's volume, there's memory, price memory. What's the memory associated? The average price memory happens to be lined up with that prior resistance level, almost perfect. So that gives us another tool to confirm the way we're looking at it and saying, okay, now the buyers are in control. Can they stay in control? How do I manage risk from here? And hopefully this stock will do what it seems like it should be able to do now that we've exhausted the sellers and buyers have regained control.
So if I'm doing the same thing, and you probably have seen this chart 100 times, which is NVIDIA.
Yeah.
And this time I anchored it to the bottom, right? To the 104 that came in October 13th, the 107.
Yep.
This is the anchored VWAP. It's so far from it.
Right.
Now, I used NVIDIA just to make a point here. It would be easier. Does this mean that institutions right now are barely buying it according to the VWAP, or they're anchoring it in different places and just reducing their buying size?
Right. So great question is, where do I, when I look at that anchor, look at it and say, that's so far away, it doesn't provide me any value really whatsoever right here. So instead, if we were to look at it and say, what was the most recent catalyst for the stock? What did we just have happen? So what I like to do is anchor from a catalyst. So go ahead and put one on that earnings gap right there. So when the perception of supply and demand shifts dramatically and suddenly, that offers us an opportunity to measure from that event. So if we put it as you did right there, now you'll see that what will happen in the case of this is kind of what we were just talking about, is if someone's buying NVIDIA for the next 3 months and they are buying a certain number of dollars each day, they'll say, wait a minute, if it's 2 standard deviations above that average price, we're only buying 200,000 shares that day.
Okay.
But if it pulls back to the volume weighted average price, we're going to buy extra shares. And that way we're getting a fair price. We're not chasing the stock. We're not paying up too much, but instead we're buying additional shares at that anchored VWAP because that's the average price since then. So what you'll see is that will often become a level where the stock finds support, where you might not have seen anything else. Yeah. Now, in this case, it happens to be the 20-day moving averages right there as well, which a lot of people look at. But it will give that insight. And again, whether you use it on a standalone basis or complementary, and as you just saw in mode, I was looking at traditional support and resistance, and in NVIDIA, I've got a 20-day moving average on my chart as well. It just gives us that extra confidence. And a lot of times what you'll see is it doesn't pull back to the 20-day moving average. It pulls back a little bit deeper, and then it finds buyers magically. And you're like, well, why did it find buyers there? And you'll see the anchored volume weighted average price was there. I would just encourage people to experiment with it. I don't really, I don't win or lose if somebody adds it to their charts, but I've been doing this full time since 1991. And it's the most important tool that I've found for objective measurement of supply and demand, hands down. And it makes more sense than a moving average. Moving averages work because everyone uses them. There's no magic to the 20-day simple moving average or the 21 exponential moving average. But instead, if we say, the true supply and demand from that event, now we can get inside the psychology of the participants and understand, okay, they're still buying because they perceive that was a great earnings report and they want to own that stock.
Yeah, that's great. And I think that everyone can practice that for sure. And that's why I showed how to do it.
Yeah.
Let's talk about the markets for a second.
Okay.
We dove directly into the VWAP. Let's go out.
Sure.
Were you surprised from what happened from the beginning of the year? Not even talking about the last few days, which everyone's waiting probably for CPI, but were you surprised?
The market it seldom surprises me, or if I like to say, if I had $1 for every time I was surprised, I'd never have to trade. I kind of, I came into this year with that same phrase: if they don't scare you out, they'll wear you out, in terms of the SPY and the Q.
Yeah.
And I was kind of making the case that it would take a little bit of time for the market to still go sideways, and then maybe around this time of year start to move higher. Instead, it started to move higher 2-3 months ago. So it did surprise me in a way, but it's not that I haven't been able to participate in it. And that's the key, is not whether it surprises me, but how did I handle that? And, once I start seeing individual stocks behaving bullishly, and then the market starts to behave bullishly, and then the semiconductors start to lead, and, some of the defensive sectors, lose favor and growth comes on strong, it's just a matter of listening to the message of the market. I have the luxury of being a swing trader, so I don't have to stay married to my opinion.
That's true. And when you're looking at, stocks like InMode and others, they're basically showing us not only the expansion, but also the participation of smaller, it's not even mid-cap, it's small cap. Let's call them, they're mainly known as Cathie Wood stocks.
Oh, no, don't curse it.
Exactly, that's why I threw it in. No, but it does show a pattern that we tend to call a bearish to bullish. So a lot of kind of stocks are making that turn. InMode, the way it looks on the chart is the same as Shopify and Robinhood and a lot more that we cover here. does that mean, at least, even as a swing trader, do you feel more comfortable staying overnight with stocks? We're going to get to earnings in a second, especially the earnings that we have, versus, you know what, I'm closing everything every day, like in 2022, because you never knew which report you're going to get in the morning and the market's going to be hammered.
Yeah, even the first couple months of this year, Micah, I thought it was, you know, a much riskier environment. We hadn't made the turn yet for the market. The market was still, you know, big ups and downs, and then it settled down a little bit. And from that compressed volatility, we saw the break higher. And individual names, again, were kind of pointing the clues that I'd look at a stock and I would, you know, basically close it out before the end of the day. And I'd start to notice a lot of times that stock would continue. So I started saying, okay, well, I'll sell half, I'll sell 2/3. I'll start, you know, giving overnight tester positions. And then I'm not getting stopped out of those. So to me, it's always about listening to the messages of the market. And if I can tune into the market and adjust my thinking to what it's telling me, rather than saying, hey, I'm a swing trader, I have to hold it for 5 days or whatever it is, then, you know, that's the way to success, is to listen to the market.
That's a great saying, you know, listen to the market. And you know, I love the fact that you tried it out, you know, saying, you know, I'm reducing position, let's say half size. Let's see what happens overnight. You know, something is happening. I want to participate, but I'm not going to risk too much.
Right.
And if we're talking about risk, Friday would be the banks probably. I assume you're not trading a lot of banks because the volatility is there, I assume, is lower, maybe the regional. But next week, we're starting to get the Netflixes, the Teslas, and the week after, Microsoft, Google. Are you expecting this earnings season to be, I called it, I'm going to tell you what I called it, just for you to say if you think I overreacted or not. I think CPI tomorrow and earnings in the next 3 weeks are the most dramatic in a lot, because everything ran so much.
Right. So now here's a time for the market to say, did we get ahead of ourselves?
Exactly.
Or is this something we can sustain? Is there something to hold on to? And when you see NVIDIA reporting earnings and saying, not only that, it's going to be so much better in the future, take all your adjustments higher, then, you know, that's a sign that NVIDIA will continue to do well. And it's, you know, that's the beauty of earnings season, is that we get to see on a stock by stock basis, has this rally been justified? Has the stock been punished too hard and now they're turning a corner? I'm not about making predictions, but it's always about how does it handle, you know, how does it react to the earnings? And then after that, how does it continue? Does it hold those gains, or are they immediately given up? If they're just start, you know, if we start seeing company after company gap down 10, 15%, and repeating the same types of themes that, you know, our orders are slowing down, we don't see the visibility and that sort of thing, then the market will start to tell us that on a stock by stock basis. That will start to hurt the sectors. That will start to hurt the broader indices. The trend is your friend, though.
Look, we had an amazing first half. We can't, you know, it was an amazing, especially because most of the people came in bearish. Most of the people came in, even long-term or short-term, came in with a bearish stance. They believed, just like anyone else, that second half would be better. First half, we're going to see the recession. And right out of the gate, January 3rd, everything goes up like, you know, like magic. It's not like it was a different company 3 days before. Now, guess what? It's a new company altogether. NASDAQ, up to now, when we're recording this, July 11th, 36%. And that's technology. We know the weighting. They're going to do rebalancing. Doesn't it frighten you going into earnings this way? Would the VWAP break?
No, it doesn't scare me, because, again, I have the luxury of a swing trader's time frame. And that means I can stand aside, let other people take the risks of holding through the earnings, and then come in, let the dust settle, and then choose my spots. You know, Micah, I'm sure you know the phrase, news and surprises tends to follow the direction of the trend. Hopefully that will be the case again. But hope isn't, you know, the way I like to look at things. So it's just, it'll just come down to each stock individually and managing risk. And hopefully, there aren't a lot of landmines out there. I much prefer a bull market. It's so much more enjoyable.
Of course.
I make more money. It's easier for me. Some people claim they're good in a bull market. I'm okay, but it's only because I've been through 3 good ones. And it's always fascinating to see how it's going to respond. Tune out the noise and listen to price action.
I agree. First of all, this is your book. I'll put it this way. You probably have a slide, but I'll put it this way. I think people can order it on Amazon, right?
It's on Amazon. And, I was looking to see, do they deliver to Israel? And I think they do.
I assume Amazon delivers everything now, international.
Oh, do they? Yeah. Okay, there you go. It's on Amazon. And
do you have it? Do you have it also digital?
That's on Google Play and on Apple Bookstore.
Excellent. And where else can people follow you, find you? I follow you on Twitter.
Net is my site for my swing trade service, and I put a lot of free content out on Twitter. That's really the easiest way to find me. I've all the free content I do is on Twitter, and I put a good amount out there.
What about Threads? Have you tried it out?
I have tried it very reluctantly. I don't want to start doing it again. It seems like most of the time I'm on Threads, I'm muting people that I'm not interested in hearing. I hope it fails because I just don't want to use another social media service.
So I have, and anyone that came just to hear VWAP, we're going to talk a minute about Threads and Twitter just for fun's sake. I found Threads being more of a regular social media, while Twitter, if you only follow, let's call it the financial news or people that follow stocks and investments, you clear the noise. Now in Threads, I post reality commentary on things I see on TV. I would never do that on Twitter. It's stupid. No one would follow me if I would do that.
I wouldn't follow that. And I wouldn't expect people to follow me for those things either. I think they've made just a different version of Instagram where they're just going to feed all this content that they think you're interested in, rather than you having control and saying, I want to follow the financial people here. I want to follow sports. I want to follow whatever it is you want to follow, rather than trying to pick that for you.
I agree. So Brian Shannon, thank you very, very much. And of course, I'll try to translate some of the comments. So guys, feel free to write comments below. I'll translate. And, according to the comments, I will leave the door open for you to come again and be a guest in our show. Thanks again. And of course, from now on, any question you have on VWAP, Brian is the person to talk to.
Thank you very much, Mike.
Kidding. You're not the ambassador of VWAP. You're just the one that's trying to populate the idea behind it, probably.
Sure. I'm the VWAP ambassador if you want.
Excellent. Thank you very much.
Okay. Thank you.